Greetings, everyone. I'm excited to welcome Sam Glasswell, co-founder and CEO of Arbolus. Sam, welcome to the show.
Thanks so much, Ben. Really appreciate you having me.
Great to have you here. Looking forward to this discussion, conversation. But first, tell us a little bit about your background.
Sure. So we started Arbolus about 6.5, 7 years ago now. I started my career having once explored being a lawyer and kind of struck that off. I joined a very early stage company when I started my career in a very similar space to what we do now. So joined them, as a pre-revenue startup. Spent a couple of years in London, moved to New York and spent a few years in New York. And then after a stint at business school, decided to start a business. And I guess, as I think probably is often the most, in my opinion, one of the best ways to launch into an entrepreneurial journey. It's great to have seen some of the challenges that exist in a market that you know really well. So, we built on the proposition of the market that we knew really, really well. And, that's very much how we've kind of grown and developed the company so far.
Interesting, because looking at your profile, it looks like maybe your kind of starting company's career journey maybe was the genesis for Arbolus. But yeah, tell us. Let's talk about Arbolus. Tell us what are the products and or services that it offers.
Sure. So, the company I joined originally at the beginning of my career, I guess you'd say is in the expert network space. So I'm sure you'll be familiar with companies like GLG. The company I joined was Alpha Sites. And so for those that don't know, these are companies that help introduce investors or consulting firms to experts for 1 hour calls. I'm sure you've done many of these in the past, Ben, given your background. And so that was the industry that I came from. And I guess when we started Arbolus, it's a brilliant industry with great CAGR, really consistent growth year on year for the industry. But ultimately, these companies are brokerage businesses rather than tech platforms. And we felt we could build a model in the space that really would use technology to help people get access to insights in a much more efficient way. So we were asking ourselves questions like, why is a 1 hour call the only medium to help people share information? Why is so, clients would do 1 hour calls with those types of companies. And then the information's lost basically straight away because at best it's scribbled down on notebooks and things like that. So we basically built technology around that proposition. And I guess today our platform allows people to do calls, but then they can retain all of the information in transcripts. We transcribe everything through AI, make that data searchable. We have messaging through the platform, and we also have tools that help people to be able to collect information asynchronously. So people can ask questions to experts, get answers to those questions without the need for a call. And lastly, people can track data points of companies that they're looking to invest in. So they can see customer sentiment data from businesses they're looking to invest in. So I would say, in summary, we're a primary research business and we use data to be able to help reduce the friction to insight.
Yeah, interesting, because like you said, it sounds like the traditional model was just like a brokerage. Try email. I get those emails. Hey, someone would like to talk to you about this or this tech space. So you're taking it to the next level. Where building that platform, but also maybe wrapping some data around it and really enhancing the whole process. Then it sounds like.
Yeah, exactly right. And, I think there's so much, one of the great things about the industry that we're in is demand for good quality information has never been higher, and building new tools to help people both collect more of that information at scale, but then analyze that information. That's a limitless journey. And, we're really excited over the next few years to just keep layering on features to the platform to help enhance that for our customers.
And then what's your ideal customer profile? It sounds like investors would like tapping into this network. So investors and who really leverages your platform.
Yeah, I think investors for sure. So we do a lot of work with private equity firms, particularly growth private equity firms, right? Who are maybe looking at B2B SaaS companies that are maybe 20, 30 million of ARR. And what's really interesting is, businesses like that don't have a ton of information on them. If you're looking at investing in a public equity, there's a lot of information out there on business, a lot of analyst coverage on those companies, but not for smaller B2B SaaS companies. So therefore, private equity, those types of growth private equity firms are really great customers of ours, consulting firms that support them as well, hedge funds, but also I think, corporates aren't historically great users of expert networks, that they're 95% of the client base of someone like Gartner, right? So our proposition, I suppose, the tool set makes it much more usable by clients outside of the investment community as well.
And how would you like how does the pricing work? I'm curious, like say the brokerage model, if that's just like you pay a fee and they set these calls up, and then how is your pricing working versus these traditional models?
Yeah, lots of the players in the traditional space, you're right, would be effectively have ad hoc pricing models where they charge per call. Sometimes they might sell clients retainers to use the platform for a year. So not exactly, you wouldn't necessarily call that sort of like a pure SaaS model. But what's really interesting, even for those traditional players, is the retention and the reusage is off the scale, right? So, the NRR, even of companies that are selling transactionally, is best in class, if you look at any SaaS company. Our pricing is a bit more committed than that. So our clients buy 1 year access to the platform, and there are credits, so it's still usage based. But with the data product, we sell that on a seat based model. So that is more akin to a traditional SaaS product.
Okay, interesting. So the data product more traditional MRR, ARR, but then usage based on the expert network. Yeah, really interesting. And let's talk some stats and figures. So what year did you found Arbalus?
2018.
Okay, 2018. Like you said, about 6, 7 years in. And then do you have a headquarters location?
It's technically London, but our business, we have offices in London, New York, Barcelona, and Delhi. And, funnily enough, even though the legal headquarters is London, it's actually our smallest office. We're about 200 people globally. And as you might imagine, in what we do, the US is our biggest market by revenue. Barcelona is actually our largest office by headcount. We found it a great place to build out the company, and just amazing talent there. So yeah, Barcelona is currently our biggest by headcount.
Okay, and then I was going to ask your team size, so about 200 staff globally. And then anything you want to share around revenue ranges, ARR ranges?
I mean, without being too specific, we closed the Series B in October at the end of last year. So, you can infer from that roughly what range we might be in. I think we've been really lucky. The company has grown pretty sort of, our market is driven by private equity deal activity. The last 2 years, that's been pretty flat, but we've managed to get great growth in spite of that, probably because, people are switching, I suppose, from traditional providers over to Arbolus.
Yeah, let's hope 2025 is a good M&A year, definitely for tech. And then,
Yeah,
so your client
it's
base,
overdue.
yeah, it is overdue. We're kind of waiting, and yeah, hopefully we see a pickup here. And then, so your ICP investors, growth private equity, hedge funds, maybe some corporates, and then tell us a little about your go-to-market motion. How are you finding your clients?
Yeah, I think one of the things that's great for us is that some of our clients are blue chip logos who, have expanded really well with us since we won them. So a large part of our growth comes from, our account management team who are unlocking new spend at existing clients, new offices, things like that. So historically, we've put a lot of effort into harvesting those relationships, and then new customers have come to us semi-organically because the client bases that we work with, they're quite tight knit communities, and referrals we found to be the most effective way. We do great work for a client here, and then we get a great introduction. Um, I would say that's starting to change now because, with our data product, that effectively is content. So, we have data points on customers of companies that investors are looking to put money into. And so we're now embedding that content into our outbound sales processes. We're doing webinars to drive inbound leads onto those things. So we're at kind of an interesting inflection point where historically our go-to-market motion has been all organic and has kind of come as a result of some of the good work that we're doing. Now we're actually finding a way bigger inbound sort of, the potential to drive way more inbound leads because of content. And, we're starting to explore things this year with like SEO because, historically haven't done a lot on that. Then now we've got landing pages with information on those that relates exactly to what we do. So I think we're really excited to pull that thread. And, it was interesting. I was having a lunch meeting last week with the CEO of a company who get 90% of their new business from inbound. For us, it's historically been the inversion of that, right? So really interesting to see how that changes our go-to-market this year.
Yeah, interesting. Yeah, as you scale, looking to leverage different distribution channels to get to the next level of growth. And I'm curious, your data product, I don't know if you've heard of I think it's called Owlers, like a competitive intelligence, like what's happening in the market tracking companies. So it'd be similar to that or a little bit different.
Yeah, I'm familiar with them. It's not dissimilar in some respects, but also quite different in some key areas. So I think what makes, and G2 Crowd is an interesting example of customer reviews and people use platforms like that. But what makes ours very different is the attributions. So you could see, that a data point from a customer saying, these are the features that we value. This is the NPS that I give it. But what's really interesting for us is two things. One, you can see who said that thing. Not obviously we protect data, but you can see who that, what is the profile of that individual who gave that data. And then more interestingly, even than that, you can then double click on that person and send them a question set or book a 1 hour call with them. So I think that attribution is probably the thing that makes our platform really most powerful. And I don't think there's too many companies out there that do that, can sort of do what we do in that regard.
Yeah, no, I appreciate that insight. Interesting. And let's switch over to the fundraising side. How much, you mentioned the Series B, so how much capital have you raised to date?
Yeah, in terms of new equity capital, it's about $25 million. We've been quite capital efficient. We've raised other funding in the form of venture debt and things like that as well. But, I think, yeah, if you look at capital raised to sort of where we are with revenue, we're probably on the more efficient side than many companies.
And then when I was looking at one of those press releases about that latest raise, it mentioned a growth equity investment. So was this traditional, say, Series B VC investment, or was this more on the PE side of an actual, say, growth equity and investment in the business?
Yeah, I think it's a blended categorization that in some respects, right? Because yes, you have pure outright VCs like A16Z, Sequoia, these types of names. And then you have private equity. But in the middle of that, you've got, I think a lot of private equity firms have moved towards the venture end of private equity and, what we would call growth equity. So our new partner is very much one of those types of firms. It is attached to a private equity fund, but they think it's a pure growth investment they've made into the company. It's a minority holding, and they're interested in they're underwriting the investment purely on growth. So for us, I think that's really a great partner because they also understand our business really, really well, and that they are right in the ICP of the people that are using our product.
Yeah, it seems like they could give you some good feedback. So was this, say, minority growth equity investment, obviously to continue to scale the business, but was there also a bit of just kind of diversification, taking a little money off the table?
Yeah, the main driver for us to do that round, because the time from our Series A to B was quite long. Like many companies, we stretched that out and kept focusing on growth. One of the main reasons was to, raise money from a US institution who are in the market that we're trying to sell to, and that was a big driver. We also felt that 7 years in, it would be a good thing. Obviously, as you might expect, our growth plans are 4 or 5 times in the next 5 years. We're at the stage now where getting from where we are to hopefully growing the business to north of 100 million, bringing in structure and thinking about executing on the business in a different way is quite useful. So those were probably some of the main drivers. And then, like you say, yeah, I think we started 7 years ago. We did our first, raised our first money 6-ish years ago. And the great thing about bringing in new capital is it gives early investors and things like that the ability for some liquidity. So those were the drivers.
Okay, yeah, no, appreciate that insight. So for other founders who are thinking about that raise and, let's say you're kind of in that Series B journey-ish, for those founders who have maybe raised some decent capital, any fundraising lessons learned in that last raise that you'd like to pass on?
In the last raise, yeah, it's an interesting question. I mean, I think some of the biggest lessons I've learned on fundraising in general, some of the things that we've done lots of things, imperfectly, but there's also some things I think we've done well. So one thing is, I think it's good for companies to be relatively capital constrained, to really only raise what they need and then to drive growth and deliver on expectations of investors and then to raise new money when they need it, rather than being kind of bloated with capital and feeling like they need to spend it. So we've definitely done the former, which I think has been useful. The other benefit to that of us is, we, particularly with our seed investor before the Series A, we raised money at sort of 4 different priced rounds before our Series A from the same investor. And that was also, I think, very good because it minimizes dilution in the cap table. You're raising money when you need it. And for the investor, they're only putting funds in when they've seen validation. So I think these were some of the things that worked really well. With the Series B raise, what are some of the lessons I learned? I think we met this investor maybe 12 months before they actually invested. And I think that was great. We had really good conviction that they were going to be good investors because we'd spent so much time getting to know them, and vice versa, I think, from their perspective. So, we're lucky because I spend all my time meeting investors, but those investors are also potential clients of our platform. So we have that nice synergy. But I think my biggest lesson, particularly in the more, in the later stage funding rounds, is getting to know people really, really early and seeing if you've got a fit and you think you can work together well. That's incredibly valuable. And probably I would never just take the best valuation, let's say. I would prioritize bringing in partners that you really want to work with, because you can get a great valuation, but from a imperfect partner, and that doesn't help anybody in the long run.
Yeah, no, appreciate that insight. That comes up quite a bit of just that relationship, and then that founder investor fit, and that good partner versus just that best deal on the table. And
hopefully you get both.
Yeah, that'd be the best of both worlds. Great partner, great term sheet.
Yes.
And Sam, at this stage of your business, do you have a favorite number or metric that you're focused on to guide the business, or maybe a couple?
Yeah, I think probably the ones that stick out to me mostly are, in the last few years, obviously, the burn growth ratio has come under lots of scrutiny for really good reason, I think. So Rule of 40, I think, is probably one of the best metrics to figure out. I think it's great for companies to burn money if they are spending that money on growth. And so getting that balance between cash burn and growth, I think, is really interesting. And Rule of 40 is a good one that we look at a lot. The other, is we're lucky in our business. And one of the reasons that we managed to do the Series B is because our net retention numbers are really, really good and our churn numbers are low. So I think those metrics are really important. NRR is I think the holy grail metric, because it just shows you that you've got an engine that can drive growth from your existing client base, and that's a really good one that we pay a lot of attention to.
Yeah, definitely. Yeah, net retention, huge one. Gross revenue retention, Rule of 40. Like you said, the balance between profit and growth is so important, for mature companies, and even early stage trying to manage, to again, those expectations with investors, what we're trying to go for, even if we're still burning a lot of cash. And, Sam, really appreciate your time today as we wrap up here. What's coming up next for Arbolus?
I think when we look to the future, we're really excited about really sort of a product-led growth strategy. So we're leaning in a lot into data initiatives. How do we build more data onto our platform? And like I said, how do we help customers collect large volumes of that data? Then how do we help them interpret that data? So we're looking to really build on the current proposition and the features in the platform to, build towards an exciting future and ultimately a bigger addressable market for the business.
Oh, that's great. I love that. And I do talk to quite a few investors, so I'll have to pass them on to your platform when I talk to them next. So Sam,
please do.
Yeah.
Send them our way.
Yeah, happy to. So Sam, really appreciate your time sharing your journey today. And if listeners would like to learn more about Arbolus, where should we send them online?
We're pretty active on LinkedIn because of our B2B sort of focus. Our website is also a great place to find us for careers and things like that. So, we'd love to connect with anybody that's interested in the company.
And just to make sure I have this right, so the website, it's going to be arbolus.com.
Exactly.
Okay, yeah. Perfect. All right. Well, if you'd like to learn more and check out what Sam's doing at Arbolus, check out arbolus.com. And Sam, really appreciate your time today.
Thank you. Thanks so much for having me, Ben.